Hi, welcome to Christensen Wealth Management. I'm Michael Christensen. Thank you for taking time out of your day to watch this weekly stock market update for the week ending Friday, December 7th, 2018. Before I jump into the charts and commentary, I'd like to begin with the quote of the week. And it is not a motivational quote, it is simply a piece of wisdom from one of my favorite books, Riding the Bear by Cy Harding. He once said, "Note that over the past 100 years, there have been 29 bear markets, one an average of every 3.3 years. Now, pause. Take a moment to think about the fact that it has been about I would guess 8 years. Seven years, I believe it was, since our last one, and they typically come every 3.3 years. Now, the declines averaged 31.6%. The 9 worst bear markets wiped out an average of 49.4% of stock market value. And one of those puppies came along every 10 years or so. Keep in mind, it's been 10 years since we hit the peak of 2008. So just some wisdom from a very bright man, Cy Harding, who wrote a book about being cautious and how to navigate bear markets, and he wrote that book in 1998 and published it less than a year before we hit the peak of 2000. So let's go ahead and talk about this market, by the way. Things are getting pretty crazy in the U.S. markets and overseas, but I just want to talk about the U.S. markets. On Tuesday, the Dow Jones Industrial Average was down 800 points. And then, thankfully, we had the day off on Wednesday to memorialize George H.W. Bush. And then today, for a while, the Dow Jones Industrial Average was down 700 points, but managed to reclaim itself and close down about 80. So things are getting very volatile and very unstable, I guess you could say, in the U.S. markets. And tomorrow, when this is being recorded on Thursday, and Friday this week is everything, because the Dow either needs to save itself for the week, but if it closes down, that could open the door for some more trouble in the Dow next week. The Dow Jones Industrial Average broke its 2.5-year trend line for a few hours today, and I thought for sure that was going to be the big moment, but it scrambled back above that trend line, and I'll show you that on the chart here in a minute. Let's go ahead and jump into those charts, beginning with the Dow Jones Industrial Average. And before I do, please, if you have not already, go to the summary description of this video or in the top right-hand corner of christensenwealth.com and go to the Facebook, LinkedIn, and Twitter pages and like or follow them. And if you haven't already done so, subscribe to this YouTube channel and click the little bell next to it so you'll be notified of all of the videos that I post. Let's take a look at those charts. Again, beginning with the Dow Jones Industrial Average. Looking at this chart of the Dow Jones Industrial Average, you can see that we are in a established downtrend once again on the Dow Jones, and we currently are back to where the Dow was on January 3rd. So the Dow Jones right now is unchanged for 2018, which is quite disappointing for those people that rode this rally all the way up to the high. But let's take a look at some of the trend lines. And first of all, we'll do the short-term indicators, the 5-day moving average in red and the 20-day moving average in blue. You can see that the 5-day moving average in red has popped back up above briefly and just slightly above that 20-day moving average, technically signaling that we have strength in the short term because of this big rally that began November 23rd and then peaking on December 3rd. But that little signal appears to be possibly short-lived because it's already turning back down again. And you can see that the price of the Dow Jones in black is already below the 5-day average and the 20. So that signal may cross over the next few days between now and the next video. Let's look at the intermediate term indicators. The 20-day moving average in blue is still below the purple 50-day moving average. and not even trying to cross. So we still have significant weakness in the intermediate term. Intermediate term means over the last few weeks to recent months. And you can see that's because the Dow Jones peaked out here on October 3rd and has been declining ever since. Let's take a look at the trend lines, because there was some incredible action today on the 6th of December. Let's go ahead and draw in one trend line from the high of October 3rd, and you can see what the Dow Jones has done. We peaked on October 3rd, crashed about 10% or so, rallied up again and peaked on November 8th, and then dropped really hard and made a lower low. And on November 23rd, we rallied up one more time and then just kissed that red line, and then down we went again. So the Dow Jones has a high, a lower high, and another lower high, which is a very bearish situation. And the one thing that happened today was I thought we were going to break the 2.5-year trend line, and I'll show you that right now. If we draw in a line here from the low of February 2016 and draw that up, you will see that we did this little thing here. Go ahead and change that to a candlestick chart so you can see. So we started here, the low of February 2016, and then we made a second point right here, which was November 2016, and then we rallied up, and then we came down and touched that exact same line on October 29th, just a few weeks ago. And I'm going to zoom in a little bit here. You can see that we went up, came back down, broke that line, which was a one-day break of that 2.5-year trend line, rallied up again, and then today we got all the way down to right here, which was below the November 23rd point, but not yet below the October low. So right now, because the Dow went all the way down to here and then closed back up here, it has saved itself for the moment, for the day. But if we close deeper below this 2.5-year red trend line and we break the October low, then that is not a good sign at all. That would be a sign of significant bearishness or danger, downside risk, whatever you want to call it, for the Dow Jones Industrial Average. Another thing worth mentioning of the Dow Jones Industrial Average is if you go all the way back to 2009, which is the point at which this red line begins down here in the bottom left corner, March of 2009, you draw that line up and you connect it with the low of January 2016 and February of 2016 and extend that out. That means that this is the 9-year trend line that the Dow was following until February of 2016. If this upper red line, or I'll change it to a blue line, how about that? We'll change that to a blue. If that blue line breaks, there's a good chance that the Dow will work its way down to this bottom red line, which would be the long-term trend. And if it does that, then that would be about, I would guess, about 4,000 to 5,000 points on the Dow Jones, which would be about a 15% drop from where we are now, just to get down to this long-term rising trend line in red. Here's the chart of the S&P 500 stock index, and it too is in a downtrend. And here we are at this point on December 6th. That takes us all the way back to where the S&P 500 was on January 2nd. So on this day, the S&P 500 is unchanged for the calendar year 2018, that is. And let's look at the indicators real quick. The short-term indicator in red, which is the 5-day moving average, is above the 20-day moving average in blue. So we technically have a short-term strength confirmation because of this quick jump in price, this rally that began on November 23rd, but you can see the 5-day moving average in red and the price of the S&P are already turning down, which may reverse that strength signal in the next few days. So we have a very short-lived rally there, and I'll get into that in more detail here in a second. Let's look at the 20-day moving average in blue and the 50-day moving average in purple. And you can see that this is the intermediate term, meaning weeks to recent months. We are in a downtrend where the 20-day moving average is still not trying to cross above the 50-day moving average, which is not a good sign at all for the S&P. So problems here, and you can see that the price of the S&P 500 is also back below its 5-day moving average in red. It's also below its 20-day moving average in blue, and it's below its 50-day moving average in purple. So we have all kinds of weakness going on here with the S&P 500. Now looking at the trend lines, as I said last week, you draw that line up from the low of 2016, from February of 2016, and we connect it like that. You can see that we have the first point on the line, February of 2016, the second point in November 2016, and then we broke it in October just this year, came down, rallied up, failed, and we rallied up on December 3rd, kissed that blue up line one more time, and because it was support and is now broken, that blue line is now resistance, and boom, we were immediately rejected and down we came. So right now the S&P 500 has tried to regain its 2.5-year trend twice and has failed twice, and now we just need to sit and wait and see what it does. But the longer term trend, which is the most concerning, is where do we go at this point. There's a very high probability that if we break the lows of October, then we are going down to this line here, which would be a decline for the S&P 500 of about 15% to get down to the the bottom long-term 9-year blue line right here. So we have significant problems with the S&P 500. I will not do the NASDAQ right now just to keep this video shorter, but the Dow Jones Industrial Average is the only index that hasn't broken its 2.5-year trend line. The S&P 500 and the NASDAQ have, opening the potential for significantly lower price. So be very careful with your investments and your hard-earned retirement savings. Thank you again for watching this market update. Before you go, I wanted to remind you that please be careful with your money in these turbulent and volatile and high-risk times. The markets are extremely unstable, and I like to remind you also that getting back to even is not an investment strategy. So if you don't know what you're doing with your investments and things are just getting too crazy, it's best to do nothing at all and call a professional. So I'm here to help if you want to talk to me, and you can find my information at christensenwealth.com, which is in the summary description of this website and on in this YouTube video, that is, and on the social media pages. Well, have a great 7 days, and I wish you a very pleasant weekend. Merry Christmas and Happy Holidays. Bye-bye.